The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gullo and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gullo.
Hey, everybody, this is the Tax Lady, and this is our hour to talk about taxes or letters or tax planning, or if you're a small business owner or have rental property, boy, you want to listen to this show because we got some special stuff for you. But as always, whatever you want to talk about, whether you've been getting love letters from New York State, federal government, you haven't gotten your state refund yet, you still haven't gotten your state refund. If you need any help, you want to give us a call here in studio, 803-0930. 803-0930, star 930 on a cell phone. And I'm joined in studio again this week with Tiffany Fabian.
Hey there, Esther. It's so funny. I looked at Chris's phone, my husband's phone, last night, and his cousin texted him, and he still said, I still haven't gotten my New York State refund. And Chris said to him, what was your response?
Either did we.
And neither did my husband.
Right.
So, and of course, that was Christopher Fabian. Hey, Chris, how you doing?
Hello, Esther.
Hello, Christopher. So let's introduce people to the seminar that we're having this fall. And we're going to be talking about it every week. And during our summer series, we have some of the guest speakers for the seminar that are joining us on Ask the Tax Lady. And so we just nailed this whole thing down day before yesterday, right, Chris?
Yep. It's October 13th at 10 o'clock.
That's not Friday, is it?
No,
it's a Saturday.
Saturday, and we're going to do the radio show from there, and we're going to do it at the Eastern Hills Mall at the WBBZ station, and it's called All the Tax Buzz and the Financial Buzz. So what's the buzz? Play on words there, because we're going to do it at the Buzz station.
Right?
Exactly.
And they're going to tape it. And we're going to air it. We're going to air it on TV.
Yep,
as
and
well.
some of the guests, we're going to have Russ Gullo, who's in studio with us today. We're going to have Dennis Kitchen. We're going to have Jeff Boron talk about student loans. We're going to have Jeff Katz on the show, which is an attorney. On October 13th, right? We're going to have Dennis Kitchen. We're going to have Tim Eliason talk about the marketplace and
healthcare in the marketplace.
Healthcare in the marketplace. Anybody else you can think of, Chris?
Well, if anybody else
and
has
us,
we're going to be there.
Oh, and then
it's free of course. It's open to the public. Just let us know you're coming.
And the thing is, we're not going to solicit you. I mean, we really just want, especially. In light of all the tax laws which are now in effect, and so many people have no idea how these things are going to affect them. And so what we want to do is, before the end of the year, we wanted to have this seminar to make sure that people not only knew about their finances, like with estate planning and maybe bankruptcy proceedings or exchanges, which Russ, who's our guest today, is going to talk about. We want to make sure that they understand about how the tax law affects them so that they can make changes before January, because there's some major sweeping tax changes, and it ain't just the increased standard deduction.
That's right. That's right.
Well, speaking of that, we want to introduce our special guest, Russ Gullo. Now, Russ, we're so honored because he's a certified exchange advisor. He's the CEO, of course, of Russ Gullo and Companies. He's a qualified intermediary for 1031 exchanges, and that's a fancy way of saying you can get out of your investment real estate without paying the taxes now, but you do need a qualified intermediary, and we're so thankful that Russ is here. And he's a Western New York guy, aren't you, Russ?
I am, Esther.
So thanks for joining us on Saturday. At least it's not 91 today.
It's a pleasure, as always, being here.
Hey, that's great. So, I know that right now with the tax, we're talking about the tax reform, one of the major changes in the tax reform is that the only thing that can be exchanged is real property. Is that correct?
Yes, Esther. They've eliminated the opportunity to exchange personal property.
So those of you that have small businesses or you have a business vehicle, and you used to be able to take your business vehicle and go in and trade it in on another one, thereby not making that a sale but a trade. That is not going to happen anymore. So it's interesting. If you have had a dump truck with a fair market value of $25,000 and you want to trade it in on a new dump truck that costs $75,000, the actual cash paid and borrowed for the new dump truck would be only $50 because they're giving you $25 on a trade. Before, you used to do a 1031 exchange on that. Now you can't. So the sale of the $25, the trade-in, would actually be the sale, and you'd end up paying taxes of like $7,500. That's really important, and that's just on a business asset, a dump truck, for instance. But this is especially true with real estate, and that's why we're so lucky and blessed that we have Russ Gullo with us, because if you're somebody, there's lots of investment property in Western New York, isn't it, Russ?
Oh, absolutely. Absolutely. And it, right now, Esther, in the marketplace, it hasn't been hotter, in the past 40, 50 years as far as what's happening with Western New York.
Well, it's interesting because we're trying to get a new corporate headquarters because our parking is such a problem, and we cannot find anything to buy.
Very limited inventory.
I mean, there just isn't anything to buy.
That goes
so whether
for
you're
personal
somebody
houses,
wanting
too.
to sell your personal residence or your business property, list that stuff because it is really a hot time to buy it. But obviously, when you sell your personal residence, you can take advantage of that exclusion if you lived in it 2 out of 5 years. Not so with investment property, right, Russ?
That's correct. And one of the things, Esther, speaking of that owner-occupied dwelling, one of the big concerns here locally is an occupied double or duplex.
Right.
And people don't realize that just the one unit, which is owner-occupied, gets the protection of Section 121, and they are eligible to do a 1031 exchange on the other half as well, though.
You mean on the rental portion?
On the rental portion, yes.
Right, because the other part's going to be tax-free anyway.
You got it.
Right?
Absolutely.
So explain what a 1031 exchange is, because whenever you talk in numbers, I know numbers, the IRS knows numbers, state of New York, you know numbers, but normally people don't talk in numbers.
You got it. Esther, 1031 exchange is an opportunity to pay no tax. And when we talk about pay no tax, that includes not only capital gains tax, recapture of depreciation, the Medicare surtax, and in most cases state income tax, which includes New York as well. Which is huge.
Which is a gigantic benefit.
Absolutely. In a lot of cases.
So if you had a piece of property that you paid $100,000 for 35, 40 years ago, excluding the land value, you'd have no basis left on that house, or investment property. So if you sold it for $200,000 now, you'd have a $200,000 taxable gain.
Right.
Right?
Right.
But
absolutely.
not if they come to see you, right?
That's correct. That's correct.
That's a great big deal.
I'm
Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930. Call your friends if they have rental property. They've been thinking about changing for other rental property, looking to get out of New York State, maybe looking to go down south, Arizona, Texas, Florida, where there are no taxes. 8030930, 8030930, star 930 on your cell phone. We're going to take a short break, and we'll be back on the other side. Hey, I'm Esther Gullius, the tax lady from Ask the Tax Lady. Our phone number here in studio is 8030930, 8030930, star 930 on your cell phone. And we have our special guest, Russ Gullo, who's a qualified intermediary for 1031 exchanges, which is really a whole mouthful. But I'm going to tell you, this guy can save you a ton of money. We were talking before the break that if you had a piece of property that you bought 30-some years ago, and you didn't do anything to it, it's been fully depreciated. If you sell it now for $200,000, you'd end up, without doing an exchange, paying $60,000 to $70,000 in taxes. But Russ works his magic. So tell everybody your magic, Russ. How does it all work?
Actually, Esther, it's no different than if someone were to sell a property. We use the very same contract of sales. You would list the property the very same way, and basically when there's a meeting of the minds between the seller and the buyer, the taxpayer and the buyer, that's when we are brought in as what's called a fourth-party qualified intermediary. So anytime prior to closing, anytime prior to legal title being conveyed from the seller to the buyer, we have the ability as the qualified intermediary to step into the transaction and to change it from a sale to a 1031 exchange. There's approximately 50 pages of documents that need to be prepared and executed prior to.
That you do.
That we prepare, and we work hand in hand with the closing attorney, and we provide all the closing instructions. And then upon legal title being conveyed, the net proceeds will come to us. They're put into what's called a qualified escrow, which is a second safe harbor under the regulations. And then those funds are used by the seller, the taxpayer, to actually acquire other real property within a 6-month window. So from closing of the sale to closing of a purchase, there's a 6-month window in between. And as long as the transaction is handled by a professional qualified intermediary, which is a safe harbor under the regulations, we have a good 1031.
So and it's pretty much seamless, right? I mean, it's not like because I use an exchange, or you, for instance, I don't have to stand on my left foot, juggle a baseball. I don't have to run down and get a bunch of forms. I mean, all of the stuff is pretty much done behind the scenes, right?
Absolutely.
Except for me identifying and looking at the property to exchange into.
Absolutely.
Right?
It's so funny. Yesterday I had a question. Somebody called in and asked me, they said, so help me out. I have a piece of rental property and I want to exchange it for a place in Florida. And I says, well, you got to call Russ Gullo, and because you need an intermediary exchange person. And so that would be Russ. And so he should have called yesterday to ask you questions about it, or he's going to call you on Monday. So
Great.
That's
Great
what
tip.
you do.
Unless you're fond of paying taxes.
Right.
I mean,
I mean, if you really want to pay your taxes, you can. And many people, they think, like, for instance, my brother, and I think you've talked to my brother, is really liquidating his properties out of Detroit, and he's moved to Florida, and he wants to get more property in Florida. So he's using your services to avoid paying a bunch of capital gains, and that's what's so exciting. You can go from one area of the country to another, and you do it by use of the 1031 exchange.
Exactly.
Right?
Yep.
Well, let's go to the Chris.
Well,
I'm
sorry,
sorry.
we got a Russ brought up the 6-month window, and we just got a texter come. It said, "Good afternoon. What happens if you miss the 6-month window?"
That's a good question.
Well, if you straddle 2 tax years, you get the opportunity to treat the transaction, as long as it was set up properly, as a 1-year installment sale. And that might be what someone might be looking for, because they might be in a lower tax, they might be in a lower tax bracket, and they might look for that opportunity. But the individual that doesn't take advantage of that straddling of 2 tax years typically would be treated as a sale.
In other words, they end up paying taxes.
You got it.
In other words, they better get their rear in gear.
And I know talking to Russ yesterday, wow, it just seems like we talk to Russ all the time. Once you get the money, it's too late.
Right.
Oh, yeah, you can't touch the money.
Exactly. Well, one of the first things the IRS trains their agents to look for is what we call actual or constructive receipt of the funds. So if it's not set up prior to legal title being conveyed, where the documents are in place, there's a qualified intermediary in place, at that point it's a taxable event. There's even case law that actually the sale occurred and the taxpayer argued that, I made a mistake, I really wanted to do a 1031. And again, there's these regulations that actually have been out since May of 1991, which provide a guideline to file. So there's really no reason to screw it up.
There's no wiggle room, right?
Exactly.
Well, let's go to the phones. We have Tom. Hey, Tom, how can we help you?
Hello, Russ. How you doing?
Good, Tom.
You knew my father. You know who this is.
Hi, how you doing, Tom?
How you doing?
Good.
You have some properties. I'm still looking to get into a bigger piece of property. You know my situation. Can you send me some details on some income and expense statements?
Sure, absolutely.
That would be great. So you like I said, you pretty much know what I'm looking for and what I'm looking to get into.
Does he want to stay
All
in
right,
the area?
So in his situation, is he looking for real estate or is he looking for a business?
No, Tom's looking for real property.
For real
He's
property.
coming out of a smaller multifamily position and would like to grow his portfolio to something larger by using his increased equity
1031
position as well as leverage, and then through a 1031 can potentially double or even triple his portfolio.
Yeah, and so, and this is the whole thing. Don't let, because you don't understand it, don't let that deter you from saving the taxes, because once your taxes are, once you don't use the 1031 method to get out of your real estate, your depreciable real estate, then it's too late. You paid the taxes. You can't call up and say, gee, I made a mistake last year. I really wanted to do this, and you didn't do it. So it's really important. And you can call us at EG Tax. You can call Russ at 675-1500. I mean, we want to help you, and the bottom line is we want to keep you from paying taxes if you can possibly do that.
And, I'm going to put this simple. This almost sounds like an Esther law, because, Esther, what's your policy?
Defer, 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 die.
Right. So for those
Dying-
listening, this is, and who doesn't understand this is going over their head, it's deferring paying taxes to later on.
Right,
So,
because the bottom line, if somebody did a 1031, Russ, right, and they exchanged for a bigger piece of property, or they exchanged for property in Florida or Arizona or whatever, and upon their death, their heirs would inherit the property, they would get a stepped-up basis, would they not?
Absolutely, Esther. It's one of the best estate planning tools available in the real property industry.
I mean, so this dying thing is a really good idea.
As long as it's not us.
That's right. Hey, let's go back to the phones. I'm Esther Gullo, the tax lady, 8030930, 8030930. We have Dave. Hey, Dave, how can we help you?
Oh, good afternoon.
Hi.
Russell, I recently sold a piece of property, and Russ, you handled it for the purchaser. But I was just wondering one thing. These were two high-income people bought this. They put in the parents of one of the people as tenants in my single-family unit that I sold. But they run into trouble.
because they're renting it to parents?
Not if they charge fair market rent.
I mean, I got full asking price cash, so I'm real happy.
Yeah.
But had you done an exchange, you would have been even happier still.
Did he do an exchange?
But
Right.
no, he didn't. He did an exchange.
buyer
Somebody,
did.
Buyer did.
The
Okay.
buyer did the exchange. But the thing is, Russ, isn't it true whether it's rental property, business property, it can be investment property as well, correct?
Absolutely. And in addition to that, Esther, there's some current tax law that allows a secondary residence to qualify under limited circumstances.
Oh,
So making it investment property, put mom and dad in, but he's looking at it from an investment standpoint. That would qualify as well,
Yes, absolutely.
right?
Absolutely.
And then somebody texted in, what are your fees, Russ?
What are
your fees? Are they based on the amount of sale, or are they based on per transaction?
They're actually a flat fee, and depending on the circumstances, there's actually two different services that may have to be provided, that of a qualified intermediary, and depending on what we're asked to do, whether we're doing a reverse exchange or a build-to-suit exchange, there's an additional service that's required that's called an exchange accommodation title holder. So our fees may range anywhere from $1,000 probably to a maximum of $10,000, depending on the circumstances. And we, in a lot of cases, will put together portfolios that individuals are disposing of where we can consolidate and allow them to acquire one large property. From a management point of view, they, rather than going from township to township or part of the city to different parts of the city, they can put together a scattered portfolio of assets that they want to dispose of. We can then use that equity to acquire just one large property.
Okay, so the bottom line is there are many pockets in your 1031 vest, correct?
Absolutely.
Things, all these different things can be done, and they're done to suit the taxpayer.
Absolutely.
And you keep them straight so they don't have a problem with the IRS.
Exactly.
Right?
And we work together with their tax preparer, with their attorney, with their real estate broker, and And
So let's say I was going to, in my $200,000 example, I was going to pay $70,000 in taxes. If it was a simple exchange, that would not cost but maybe $2,000-$3,000, right?
not even, Esther, somewhere between $1,500 and $2,000.
So I save $70,000, and the $2,000 is the exchange cost, and that goes to the basis of the new house.
Right.
So I'm not losing that anyway because it's going to basis.
Exactly. So it's pure economics. You know, what, $2,000 versus $70,000 at that point.
Well, that makes a lot of sense, doesn't it? But that's what's so interesting is it breaks my heart because ignorance of what's available means that many people end up paying taxes that they shouldn't have. I mean, I've seen people that have taken money out of their 401k plan to pay their delinquent credit cards, and you think, oh my gosh, had they done it a different way, they would have saved thousands and thousands and thousands of dollars, but people don't know.
Exactly.
And that's what's so important. When you have a situation like that, you can call Russ, you can call us. I mean, the thing is, ignorance can really cost you a lot of money. And I know this sounds like a flim-flam. It really does sound like it's too good to be true. And many times people say if it's too good to be true, it can't be true. But in this case, it really is true. And you can Google it. Go online. Google 1031 exchanges. It's absolutely in the law. It's available to you, and it can save you a whole lot of money. I'm Esther Gullo, the tax lady, 8030930, 8030930. Star 930 on his cell phone. We're going to break for news. We'll be back with your questions. Russ Gullo on the other side.
I think Stevie Nicks had a birthday this
Esther Gullo,
week.
the tax lady from EG Tax, and I think that was Tiffany Fabian telling me that's Stevie Nicks. And we're joined in studio with qualified intermediary for 1031 exchanges, Russ Gullo. And if you have rental property, if you have a business, if you have any kind of real estate, maybe inside of your business that you are thinking of maybe liquidating, maybe moving up to something larger, and you don't want to have to pay the taxes, this is your lucky day because you get your questions answered by Russ. We have people that have been waiting here for quite a while, so we're going to go back to the phones. Hey, Gina, how can we help you?
Hello? Thank you for taking my call.
Hey, Gina.
Sorry if I'm asking something that's already been spoken of. I was going through the car wash, and it was voice right out. But so me and my husband own 5 rental properties.
Okay.
And ironically, we were talking about possibly selling one to maybe get a place in Florida where we could vacation.
Sure.
So my question is, if we were to sell it and we made on one house maybe $80,000 profit, are you telling me we don't have to pay capital gains?
Right. Not only do you have your $80,000 profit, all the depreciation on the property is also part of that profit, right, Russ?
That's correct. You carry your bases into the new replacement property.
As long as you're using the new property as a rental property.
So if you are making an $80,000 dollar for dollar gain and you had $60,000 in depreciation, your real gain taxable would be $140,000, and that's where Russ comes in because he becomes your qualified intermediary. And what would she do, Russ?
Gina, you have the ability to buy in Florida, but you'd have to show at least the first 24 months of ownership rental income, or the property at least has to be available for rental. You're limited to the personal use, and then after that period of time, even though the regs and the code don't specifically state how long of a holding period, we always rely on a 24-month rule. You then have the ability to convert the use of to maybe a secondary, even a primary residence down the road.
All right. Well,
So doesn't that sound like a deal?
It sure does.
Yeah, and you hold their hand, right, Russ?
Oh,
I mean,
absolutely.
You tell them what to do.
We become
but they have to go find the place, right?
Right. We become the quarterback of the transaction, and we make sure that we are able to bring them or get them to the finish line.
Right.
Excellent. All right. Well, thank you so much.
Well, thanks for calling, Gina. I'm Esther Gullo, the tax lady, 8030930, 8030930, star 930 cell phone. We have Bruce from Franklinville who's been holding. Hi, Bruce.
Hi, how are you?
Good. What
Good,
can we
Bruce.
help you with?
Good. Listen, I bought a building in downtown Buffalo about 15 years ago for cheap, and I lived there. I still reside on the third floor. It's a penthouse on the third floor before they even had all that stuff downtown now.
Mm-hmm.
I'm going to sell the building, and I'll probably be able to get like $400,000 or $450,000 for it.
Wow.
But I don't want to buy another property. Do I have to pay taxes on that now?
Bruce, the portion that's deemed your primary, you have an exemption as long as you've been there the last 2 years. The balance of that asset would be subject to taxation. But if you don't want to go back into real estate as an active owner, there are a number of programs where you can participate in which you would be a passive owner where the asset would be management free.
So
And
give us an example.
the IRS actually came out with what's called a DST, a Delaware Statutory Trust, which is an entity that allows individuals like Bruce to come together as a group, and we could put unlimited people together that are coming out of a 1031 as well as private investors. We go out and acquire a large, possibly apartment building, maybe 100, 200 unit apartment complex. And basically what happens is we back people like Bruce into that deal that would receive all the same benefits that he would as if he owned the property by himself. But the entity is made up of numerous individuals based upon their equity position. They receive a monthly or quarterly distribution of cash flow. They are totally management free, plus all the other benefits such as equity build-up, appreciation, and tax benefits would be received as well.
Okay, so I just can't take the money and go.
You got it. You'd
Well,
have to
unless you want to pay the taxes.
Right. You take the money and go, and then that's a problem.
But then Russ also said at first the portion of the house that you're using for personal is excluded from that capital gain
Right.
portion.
But here's another thought. Just, are you happy with all your equity holdings that you have right now, Bruce? I mean, are you thinking of getting a new personal residence or investment property, anything of that nature, other than rental?
No, I just was going to keep the money and to put it in like some kind of a fund, like a retirement thing almost.
Yeah. Well, I will tell you, on $400,000. Well, let's back off. You said he was living on a quarter of it, right?
A third.
I'm the only.
So he's looking at gains of around $300 and some thousand, right?
Roughly, yep.
Right.
Yep.
So he's looking at about $100,000 in taxes if he doesn't do the exchange. That's a lot. That's a big number.
Right. And Esther, the one thing that we always bring up is now your equity really has to work hard. Your rate of return has to be hard, because if you're giving up a third to Uncle Sam in taxation, what kind of yield do you need to replace that with to be comparable?
That's right.
And with the 1031, you have 100% of your equity working for you. We can put you into a passive position where you're not involved in management. That's certainly going to outweigh or outperform from a rate of return point of view. And then if you really want to get creative and build a portfolio with the use of leverage, in Bruce's position, if he has $300,000 or $400,000, he can go out and buy anywhere from 1.2 to 1.6 in value, and really create value if he's looking to do that, maybe to advance his equity into something larger, possibly from an estate point of view for his children.
But Bruce could take out that 1/3 portion that it's his personal, and that's his money.
Tax-free,
Right?
yes.
But the rest of it that would be taxed, and let's say it's $100,000, that's what would be sheltered. But
You got it.
He could take a third of it out tax-free.
Exactly.
Right.
Kind of looks like the double or duplex owner-occupied, just on a larger scale.
No.
Okay.
No.
All right. Well, I guess I'll get a hold of you at the office then, and when I list it, and go from there.
There you go.
That'd be great, Bruce.
Okay.
All right, and his phone number is 675-1500, and I will tell you, it is, from a tax planning point of view, it is so important. I mean, when you take a look, when your accountant says, by the way, Bruce, let's make out a check for $100,000 to the state and federal, that is a lot of money.
After you get out of the hospital for having the heart attack.
Right?
Point.
Yeah. But, I mean, this, going back to the previous caller with what Russ told her, Bruce, could invest in a property down in Florida, North Carolina, Texas, wherever he wanted to retire to, rent it out for 2 years,
And then convert it.
And then convert it back to personal.
Right.
And he would
Right.
pay no tax.
Right.
You know, sometimes the best thing you can do is make that plan
Before.
and work that plan. But when you do things in haste, what do they say? Do things in haste, repent in leisure. Because it's so important that you would take those steps that you need to do, because it's your money. It's not their money. Right?
Right.
All right.
Absolutely.
The other thing is, out of curiosity, Bruce, what if somebody was
he's not-
doing, and Bruce, you're Russ, what if somebody had a piece of, let's say, a second home in Florida already, and they had other property that they were selling? Could they do an exchange from the property they were exchanging into their personal house, their second house, and have that turn into rental? Or is it because you owned it before that can't be the case?
No, you have the ability to abandon the use of a property and convert it into trade business or investment, and to have it then qualify as 1031 as long as you have the proper seasoning in between.
What's the seasoning?
Anywhere from 12 to 24 months is actually what we've been told by the people that were responsible for the writing of the regs back in 91. Kind of resembles capital gains at that point. But we always recommend a 24-month
What do you
window.
mean? How would they have to season it? You mean they'd have to get out of it?
They would have to not use it personally, abandon that use, and convert it to maybe income producing at that point.
Investment
Right.
property. Okay, good enough. I'm Esther Gullius, the tax lady from EG Tax. We have Russ Gullo here, a qualified intermediary for 1031 exchanges for all those people in Buffalo that have doubles, triples, that have business property. This is your time to ask Russ, who's an absolute expert. He's got more credentials than Carter has liver pills. We're going to take a short break and be back with your phone calls, 8030930, 8030930, star 930 on a cell phone. See you in a minute.
You looked at me, cocked your head to the side and said I'm angry. 5 days since you laughed at me, saying get that together.
Hey, I'm
come
Esther
back.
Gullius, the tax lady from EG Tax. And today we are talking with our special guest, Russ Gullo. He's a qualified intermediary for 1031 exchanges. And believe me, if you have a rental property or business property like a building, and you would like to get out of it without having your haircut, so to speak, financially, you know how important it is to be able to save money. And this is your opportunity. If you know anybody that's thinking about getting rid of their rental property or their apartment buildings or their commercial property, Russ Gullo is your kind of guy, because he can really help you. Russ, you were talking about before about reverse exchanges. What the heck is that?
Esther, not only do we have the ability to dispose and then acquire within a 6-month window, we also can sell first. So we can actually, you might be down in Florida and you might decide that, I found the property of my dreams and I'd like to acquire this, but I know it's not going to be available because now I have to head back maybe to Western New York and I don't even have my relinquished property on the market yet. So we do have the ability to acquire first. Timelines are the same, but they're just reversed. Same 180-day window, same identification period. There's a number of different other types of exchanges, such as a build-to-suit or an improvement exchange or even a partial exchange. So
what's a partial exchange?
A partial exchange is when someone decides, I want to recognize some of my gain. I want to take some of the funds because I want to maybe go to Disney or buy a new vehicle. So it's not such that you have to acquire equal or greater value, which would allow you to pay no tax. If you decided, I'd like to keep maybe $50,000 aside from the 1031, you would be subject to taxation on just that portion.
Okay, what if you had a great big complex and you wanted to downsize? You can also do that and then just pay the taxes.
You can
right?
do that as well. Absolutely. That would be a form of a partial as well.
Okay. All right, that's cool. Now, it has to be like kind, though. Now, what is like kind? Like
kind refers to real property for real property in layman's term. It pertains to the character rather than the nature of a property. And all it means is that, and again, today, we only can do a 1031 on real property. Right. So you can come out of any real property and you can acquire any real property. It can be anywhere in the United States and also includes territories. So, if you decided I want to come out of a piece of land and I want to buy an apartment building, that's like kind. If you want to come out of 5 doubles in in Western New York and you want to buy a condo in Florida. That's like kind, as long as you make that available for rental or hold it for investment. The beauty also, Esther, is that you can come out of multiple properties and consolidate by just acquiring one asset. So it's really the value rather than the number of properties.
So you can defer as long as the new property is equal to or greater than the combined other properties that you're exchanging?
That's correct.
But again, and if it isn't, then whatever is under that, that is the taxable portion.
You got it. Exactly.
Okay, that's
exactly.
cool. Now, Russ, do you hold, I know we're really fortunate you're going to be in our fall seminar, but what would someone do who doesn't, you might be driving around his car right now going to church, and he says to his wife, Martha, that's not a bad idea. We should maybe, how would someone get a hold of you?
They can actually call our headquartered phone number, which is area code 716-675-1500, or they can go to our website, which is rjgullo.com, and we would be happy to provide a free phone consultation.
Okay. Now, do you do seminars? I know that you do training. Now, who are you training? Are you training other intermediaries, or are you training the general public on 1031?
We actually, Esther, we actually provide an awful lot of education, actually nationally, but locally we just did a multifamily investment property expo. In the fall, we'll be doing our multifamily landlord-tenant symposium. Those are actually geared to investors, to taxpayers. But in addition to that, I'm Director of Operations for the American Institute of Real Estate Exchangers. We're going to be providing a 3-day program of continuing ed for both real estate agents, brokers, CPAs. We'll probably get enrolled agents as part of that with your assistance, and attorneys. And again, you guys are going to be part of that, and that's a 3-day affair that we're doing in October as well.
So the thing is, now, for instance, like our guy from Franklinville that called before, who sounds like maybe he's just trying to live life easy now. So what you're saying is that your company also puts together the deal, so to speak, where here is this large piece of property that you guys are managing? Are you the general manager, general contractor, or general manager?
What happens, Esther, is we actually have 3 different services, the qualified intermediary being one. We also we have a multifamily investment brokerage company, where if someone's selling multifamily apartment buildings, anything from a 4-unit and up, we can handle that acquisition or disposition on their behalf if they want to be actively involved in management. For those individuals that decide, hey, I'd like to stay into real estate, but I'm at my point in my career where I don't want to be actively managed, I don't want to actively manage that asset, we have an investment division in which we're able to go out. We act as what's called the DST sponsor, and we have an acquisition department that we search nationally multifamily of 100 units plus. And our objective is to acquire one. We stay in the deal as a principal, and then we also are responsible for the management, and we back other individuals that need to go back into something to complete their 1031.
So then they get a K-1 at the end of the year then, right?
Right.
Okay.
Well,
and so,
I have a question, sorry. Speaking of K-1s, what happens, say, Russ, me and you were partners in a building, and I'm done. I don't want to be part of it anymore, but you still want to be, and you want to can you do an exchange yourself because I was a partner in the asset, or no?
Chris, is it a 1065 filing?
Yes.
Is it truly a partnership?
Yeah, it's truly a partnership.
All right, so what's happened recently is the IRS amended the 1065 reporting form, and now they ask questions as far as, was this part of a 1031? So what's happened is, prior to this amendment, we were able to do what was known as a drop and swap, which meant that, like a lot of partnerships, there's feuding going on, and the partners want to go their separate ways. Well, in the regulations, they never addressed that issue. So what would happen is that partnership would be dissolved, the assets would be distributed to tenants in common, and then everyone would go their separate ways. But as of recent, the IRS said no, that we want to see a seasoning period of a minimum of 12 months, which means now you have to have some tax planning 12 months in advance.
That's for sure.
Before you dispose of that asset. And you guys know better than me. You know, most individuals don't do that, which I know you highly recommend that.
Yeah,
but
I
at
know,
that
and that's really the problem, Russ. I mean, there's so many things that are in the tax law. Like right now, we want to get people to understand. Like for instance, the being able to take your truck and trade it in on another truck and you don't have any tax consequences. But now if you take it in and trade it in, you do have a tax consequence.
Exactly.
Because the law has changed. And we try to get people to understand that January is not the time to come and talk to your tax advisor or to think about, gee, should we have done the sale of our rental property differently? I mean, now is the time, really well before, even while you're just thinking about it, is when you really need to call and say, well, how do we structure this so that we don't have to pay all the taxes?
So there's a lot of companies that have salespeople and they buy them cars or get cars for them to use. And so now when they're getting that person a new car, they can't do an exchange. They have to pay the capital gain on the transfer.
That's exactly right. But then on the, you know, with this change in the tax law, what I found out is that there's some benefits on the left-hand side, but on the right-hand side, there's like a sock in the jaw. So on the left-hand side, they're saying, okay, so if you trade in your car on another car, it's going to be a taxable event. But on the left-hand side, they're saying that the depreciation is much higher now. So you're going to end up paying taxes on page 1 as ordinary income on machinery and equipment, but under depreciation, you're going to be able to write off more than before. So
yeah, but then later on, 3 years later, when you exchange it, you're going to have a huge right. So they know what they're doing.
Smoke and mirrors.
Yeah.
So all right. So Russ, you're in West Seneca, right?
Yes, we're headquartered right here in Western New York.
And your phone number is 675-1500. And I will tell you if you have investment property. Now, what would happen if somebody had a piece of investment property and they just took a big mortgage on it, for instance, and they took the cash, then they did the sale. Is that they'd have to pay off the mortgage then, right? They would
have a small equity position, but their gain shouldn't be affected by that mortgage.
That's exactly right. I was just wondering if that would be a way around to get the cash, because a lot of times people don't understand that they can't get the cash.
Exactly. But Esther, in your example,
but you do. You get the cash and you put it towards the next transaction, correct?
You got it. That's correct.
Now, what if they need a mortgage on the new place?
They need to go back into at least the same amount of debt that they're coming out of. Otherwise, they'd be subject to taxation on what we call mortgage boot.
Okay.
But again,
if they've got a new, let's say that the place they got rid of is worth $500,000, and the place they're exchanging into is worth $1 million. So they need $500,000 mortgage. That mortgage would increase the basis on the new place, right?
Right. So if they went into $1 million and they came out of $500,000, they'd pick up some additional tax sheltering because they're carrying their basis into the new property, and basically they'd have a substitute basis based on the new purchase price. They would
plus any additional cash they had to pay.
Right.
Exactly.
And plus any other expensive sale.
Exactly.
Now the expensive sale. Now how does Erie County get their and Niagara County get their taxes?
Their mortgage tax.
The mortgage tax. And is that the same as normal?
Yes, they would continue to get the 1% mortgage tax. Erie County would get $9 per thousand for transfer tax. So nothing changes there.
So then the exchanger would have to come up with cash at closing then, right?
Right. They really don't have to come up with anything because all of their transaction expenses are coming out of the proceeds.
Out of the gain, of course. Okay. Well, I will tell you, you can hear this guy knows what he's talking about, and he knows all of his numbers. And so if you're somebody listening to Ask the Tax Lady, or if you're a client of ours and you've thought about getting out of your investment property, not only is this the best time to sell because real estate is hotter than bejeebers, but secondly, we have a great asset in Russ Gullo, who's part of our team here. And if you need any help, you can call EG Tax at 632-7886, or you can go to our website at egtax.com, or you can call Russ directly at 675-1500. 1500. You have a website, right?
rjgullo.com.
There you go, rjgullo.com.
And then-
Is there information on the website that people would fill out if they need you to contact them?
Absolutely.
Okay.
And then I just want to stress, if people get letters from New York or the federal or the IRS, make sure you give us a call. Don't just pay it first. Have us take a look at it, please, please. I urge you to do that.
That's right. And,
Yeah.
and during the week, even if you haven't been our client, if you've gotten those love letters from the federal or the state, like Tiffany says, make sure that you don't pay them, that you have us take a look at it for you, especially if you're, and by the way, if the state of New York has written you and said we can't process your refund without proof of your withholding, and you don't send them proof, you will never get your refund.
And then
So
90 days after
They kind
that.
of volleyed that ball into your court, and you have to volley it back, or else they will stop processing your return. So even though it seems ridiculous, because a lot of times people will say to us, well, they know my stuff. My employer sent it in. Well, I know that, and you know that, but they're not going to process a return without that proof. So you got to make sure you get your 1099-Rs or your W-2 forms, or wherever the withholding was originated, so you can send it in to the state so that they'll keep processing your return.
March on, right?
Right.
Yep.
And of course, in October, our October seminar is going to be October 13th.
Yep.
And we're going to be at WBBZ. We're
In the
gonna do
Eastern Hills Mall.
what's all the buzz about taxes, and we got all of our special guest speakers. And until next week, I'm Esther Gullius, the tax lady from EG Tax, with Tiffany Fabian, Christopher Fabian, and we want to thank our special guest, Russ Gullo. If you're in the market to exchange, or you're thinking about getting downsizing and you got investment property, this is a great opportunity for you. Until next week, I'm Esther Gullius, the tax lady. Have a good week. Thanks, and thanks, Russ, for joining us.